markets in a minute. Our weekly recap of what happened in markets over the last week. The US stock markets ended the week down roughly 2%, marking a fourth consecutive week of decline. The S&P 500 now sits 6.8% below its late February record high, while the Nasdaq is 9.6% below its October peak, approaching official correction territory, which is that 10% decline. Gold fell nearly 10% for the third straight week, interrupting its strong rally, which began in early 2025, from a record above $5,500 per ounce in late January, round to about $4,500 by Friday. US Treasury prices fell yet again, pushing yields higher, with the 10-year yield rising to 4.39%, the highest in nearly 8 months, with the 2-year Treasury yield climbing to just above 3.9%. As expected, the US Federal Reserve left rates unchanged for the second consecutive meeting. Policymakers still project, though, one additional rate decline this year, but Jerome Powell, the Fed chair, signaled ongoing concerns about persistent inflation and geopolitical uncertainty. Central banks, though, in Japan, England, Sweden, Switzerland also held rates steady this week, reflecting that widespread concern and caution when it comes to inflation. Oil prices stabilized near that $99 a barrel after recent volatility, while only slightly higher week on week, with oil up 74% year to date and remaining well above the February lows of near $65 a barrel. Despite market weakness, though, analysts predict that the S&P 500 companies should post approximately 12.5% year-over-year growth in Q1 this year, marking a potential 6th consecutive quarter of double-digit growth.